Hey everyone, just give me a quick sound check, make sure we're hearing me okay so we don't have any glitches. Oh, good. Awesome. Awesome. Yeah, just chat a little bit before we get going. This is going to be a live seminar, free. I haven't done one of these for a long time. I'm looking forward to it. Get a lot of notes, so I'll try to keep the paper shuffle down to a minimum. But there's a lot that I'm going to cover today, and looking forward to doing this. This should be a lot of fun. So go ahead and get the coffee pot out. As you know, I have the Runa out, but I have the invisible can because I'm actually on a green screen, so it's a see-through, but it comes out black. Anyway, Runa's ready. Everything's ready to go. Yeah, so we're probably going to be, I'm going to guess, hour and a half. I mean, I don't know how long I'm going to go. I'm going to go until I get through a lot of details and try to do it very methodically so that you folks will be able to go back, and we're going to tag all the different sections as we go through. So looking forward to teaching you folks about these indicators. A lot of you have already bought them. If you haven't bought them, you can go to the link here that's on this page and sign up. You also get a full month to the live trading room, which we do more training than real trade setups. I'm hoping that we get an opportunity to I've got Bitcoin on a chart, so I can use the 1 and 5 minute. Those of you that come into the live room, we can see if we can set up some trades there on Bitcoin. It's one of the only live markets on Saturday. So yeah, I'm not sure how long I'll go, but we'll go for a while. So we'll let the room fill up. We've already got about 70 in the room already. So we'll get going here in just a minute. Got a couple things to situate. Enjoy the music while we're sitting back, and then we'll dig right in. Yeah, the video we're doing this live on YouTube, so it will rebroadcast, and we'll have some links and stuff in there as well. Yeah, I won't be going through the mathematics. That's proprietary information, but I'll go through a lot of things that are going to be important there. Yes, we will have Q&A as well. This is full out seminar, live seminar. I used to do these for 6 and 8 hours. We're going to try to keep it to under 2. Yeah, thanks for hanging out on Saturday. There's no football. I guess there's baseball, but one of those times of the year in between. Okay, folks, we're going to get going now. It looks like the room's filled up, about 70 people. It'll probably continue to fill a little bit. So this is the plan for today. I'm going to go through, I've got a PowerPoint set up. We're going to go through a lot of details. I'm going through every one of the indicators And when I'm done, I will ask for some questions. So if you have some real pertinent questions, wait to put them on the chat line because I'm not going to be able to find them. So when we get to a section, then I'll watch for some of your questions and those type of things. So let's go ahead and start to dig into the presentation just to get everything going here. So this is what I'm going to be covering today. So I'm going to go through introduction. I'm going to talk about the backstory, a little bit about why all of this indicators that we have. There's a history here. I'm going to show you some of the very first software manual that I did, and just to show you that these indicators really have been around for a very long time and been used by me and lots of other folks as well. One of the things that is going to be quite evident as I go through the presentation today, I'm actually going to be taking you in behind the scenes of the WaveTech software, the WaveTech process. This is going to be a series of seminars I'm going to start doing probably on Saturday mornings. We'll see how this one goes, see how well received it is. But the bottom line is that what I want to do is start to bring in more depth and understanding of my work. And I'm super excited about having the ability for you folks to have these indicators on your desktop now. And we've already had some great feedback in the live room, folks using some of the indicators. I've got quite a bit to talk to you about today. So, but I'm going to go through that. I'm going to talk about who it's for and how to use them on TradingView, because that's the primary platform we have them on right now. Unfortunately, some of you know this, but we had planned on putting a bunch of stuff out on the App Store on TradeStation, which I've been a TradeStation user going back to 1992. In fact, I was the very first solution provider. I coined the phrase with Bill Cruz, who's the founder of TradeStation, calling it a solution provider. And so I was the first guy to actually have a third-party indicator on TradeStation back in 1992. 91, 92 is when we started, and it was called Market Mind. I'm going to show you a couple of things there, but I'll go through all these details on how to use that. But hopefully we will get a TradeStation release. We're going to have to do them the old-fashioned way, which is releasing files and encrypting and doing a whole bunch of other work. So that's being worked on in the scenes. We didn't think we were going to have to do that because we were going to put it on the App Store, but somebody brilliantly decided to not have the App Store in existence any longer on TradeStation. So, but I'm going to go through all the indicators and try to do it in a way that you're going to be able to relate to all of these things here. So just before we begin, I want to talk a little bit about what type of things you're going to need to have when it comes to TradingView. You're going to have, you can use it on a free version. I don't remember. I think you get 3 indicators on a page. We have a total in this suite that we've released so far of 9. And so you're going to have to at least maybe step up to premium or pro levels to get everything on the screen at the same time. I think pro is the top level, whatever the top level is. I think they give you, I forget how many indicators you can have, but it's quite a few on a page. Unfortunately, that's how they bill for their platform. So that will be something that will definitely be, you're going to have. The other thing here, as I talked about, you're going to have access, if you haven't already bought them, you're going to have access to 30-day to the live trading room. Somebody was asking, got an email this morning I saw, asking if there's replays of that. We are trying to get this stuff out on our Vimeo account. We haven't got it there yet. The people that run the platform that we use for the live trading room are working on their video issues and theoretically it's going to get out there. So if you do get the indicators, you'll get that. But this is really why I'm doing this show here, because there's obviously some of you folks have obligations during market hours. You can't hang out in a live trading room and do that stuff. And that's a big deal. So that's why I'm doing this presentation today. And like I said, I'm going to go through an awful lot of details here. Let's go and talk about just who it's for. It's for anybody really, novice, intermediate, advanced. If you're a day trader, like I said, I'm going to show you some trade setups. We're going to build charts and add indicators on the fly. I'm going to show you exactly how I build these platforms out. I think there's a way to publish some of this stuff. I'm still learning myself how to be a good TradingView user, but I'm going to, the whole concept of everything I've ever done is really trying to come up with a systematic way to be involved in the markets. And, you know, I have this thing at the bottom, creating a process to eliminate emotion. It says emotion, it should be emotion. But the process, this is the tagline I have been telling folks forever: process over attitude and opinions. Attitudes and opinions keep you in when you should be out, and out when you should be in. So you have to have a process. And in fact, the other thing I always try to tie together here is you have to be disciplined. If you look up the definition of discipline, it'll say something like this. It'll say to become submissive to a state of order to bring about a desired result. And you can't get to discipline if you don't have a state of order, which is a complete rule set. In the case of trading, it's when to buy, what to do once after you bought, and how to exit the trade. And that's really what it's all about. And one of the things, I will be telling you a story a little bit here in just a few minutes to once we get through this preliminary part of the presentation, and we'll be into the indicators. But I think all of this is going to be helpful because I'm hoping that I can relate to a lot of you that are trying, even beginning to trade or have been trading and have made a lot of mistakes. In fact, I used to joke I only make the same mistake 55 times. It would just happen to be a Fibonacci number. But the reality is you make a lot of the same mistakes over and over. And the way that you become what I call a high percentage trader is the elimination of the mistakes you make. The fewer and fewer you make, the more likely you're going to be in a place where you're going to become more profitable. And that's just the only way to do it is to trade. And you got to trade a lot, and you got to trade for a while. I remember when the whole pandemic thing happened, the YouTube channel lit up really big. And what happened was we got, I want to say, I don't know, that just blowing up. And I had people calling me, trying to reach me. And I talked to some guy, and he was one of those so-called folks that were gamblers, since there was no sports, that they wanted to gamble somewhere. And this guy went on to tell me how easy the markets were compared to gambling on sports. And I just I laughed, and I said, well, you probably have to hang around a little bit more. You're going to find out, as a good buddy of mine on the trading floor days used to say, it's never easy. So it's for anybody. I'm going to set up a little bit. We're going to talk about some day trading. We're going to actually do some analysis on some charts today. And I know you guys are going to give me all kinds of stocks that you want me to look at, but I've got a couple just to bring up, and I may pick one or two of things that you want to do. But I want you to see how the thought process goes in using this suite. Like I said, there's 9 indicators, and they all work together. If you put the whole story together, and now you virtually have a WaveTech trading system right on your screen. Now, one of the hardest things that you'll ever do in life is discretionary trading. Discretionary trading is looking at an indicator and going, Yeah, I like it right here. I'm going to buy. And then you have to make analysis. You got to keep the emotions in check, and you're trying to ask questions all along. Well, that's what the logic does for in WaveTech. It actually has a set of rules, and that's one of the series of seminars I'm going to do. I'm doing a WaveTech seminar and a portfolio expert seminar to show you how to go to the next level and run baskets of stocks versus just trading index or a few stocks. And it's a whole new world when you start to get to that, especially if you happen to have 401ks or just money that you want to run for yourself and you're just not speculating on a few charts. I always say I'm going to show you how to go from speculating to managing your money. So there's going to be a whole series of things that you're going to get there. Okay, so this is what I already said. You're going to have a TradingView account. It's real simple. I'm going to show you. You click on these invite-only scripts, and then you load the indicators. And I'm going to go through that process. Just so you know, is we have to go in and authenticate your accounts individually when you sign up. And we have international customers. Some of you are overseas. And that means that we may be sleeping when you're signing up. So when somebody is in, as soon as somebody in the U.S. is in, and we're on mountain time, so typically we'll tell you it's within 24 hours. It's actually been probably a lot less than that. It's probably 4 to 6 has been the longest anybody's had to wait. So if you don't see them, you can send an email to us at info@kendallreport.com, and we'll look into the situation. But when you sign up, we get your handle for TradingView and all that. So you'll see it's a pretty streamlined process here. Okay, so we're about to get into a couple things here, but this is the plan. I'm going to deep dive in all of the indicators. We're going to start with the PPMs. You hear me talk about that every night on the channel from the standpoint of looking at trends and all that. I'm going to show you exactly how to use these, how to identify those trends and when those changes are likely to happen. So this is the first time I've used this presentation, so it's time to get started. Just remember, go to kendallreport.com/indicators. That's where you find out. You get the free trial to the room. So let's go through a little bit of history here. So I started on Chicago Board of Trade, but I want to give you this background because it's important, because I think all of us end up on some sort of path that gets us into markets, that starts us to realize that we have to do the work to get to the profits. So 1979 is when I walked on the Chicago Board of Trade, but 1978 was when I got introduced to the markets. And a buddy of mine was reading a newsletter, and he was saying silver is supposed to go to $50. I forget where it was at the time, wasn't much, 50 cents or something. I'm like, okay, whatever. Turns out I'm in a record store. I run into a guy I went to high school with, and he's working in Chicago as a broker and invites me up to see the Board of Trade. And that was the moment where all the lights went off. I was around 27 years old, and I walked onto the floor of the exchange, and it was like the most amazing moment of my life. These guys are yelling and screaming, and all this stuff was going on, and he's explaining how much money's changing hands, and we were standing by the bean pit, and it was just like, it was crazy. Okay, it was like, I've never seen anything like that. And I just fell in love with it right at that time. And I started trading, and then I decided I wanted to be a floor trader, and actually got onto the Chicago Board of Trade. I leased a seat, didn't have the money to buy one, but I rented one, and I proceeded to lose all my money. And it was the best thing that ever happened to me in hindsight. I got I wouldn't say I was as bad as trader. I couldn't even say I was good or bad because I had just been trading for maybe at that time for around a year when I walked on the floors. It was September of 1979. And I got into a trade and got stuck. They used to have this thing limit down, and the markets weren't open 24 hours a day. So when the market closed, it closed. And in this case, it was a soybean trade, and it went limit down for 3 days, 30 cents a day, which is $1,500 a day. So for every contract I had, I was losing $1,500 a day, 4 days in a row. I would have got out the second day, but the market never traded. There was a thing called limit offered, and there were thousands of contracts to sell and no one to buy at any price that was within the price range of the markets that day. If they hadn't had those limits on, chances are we would have been able to trade out of that the next day at some price. Who knows how drastic it would have gotten. Maybe it would have been the same result. But the point is that I lost all the money, and it was very depressing. So I just love this stuff. So I decided to go upstairs and start trading. And this is where the story really starts. And I want you folks to hear this because it brought all the passion in. After you lose your money, I wanted to really trade, and I started studying charts, started trying to do all kinds of stuff. So this was fall of 1979, and early 1981, I developed my first trading system, and it was a simple single factor trading system. It was a 3 and 10 day moving average oscillator, and when the oscillator turned up, I bought. When it turned down, I sold. I did it on treasury bonds and currencies and gold and some other things. And the trades lasted somewhere between 3 and 8 days most of the time. And I would trade 3 or 4 times a month, and it worked really good. In fact, in 1980, that little system did 235% gains. So that was good. So that was my first introduction to technicals. And you have to remember, in 1980, there were no computers. Actually, I did have, in 1982, I got a Apple II, and I had VisiCalc on it. And I was able to start to do spreadsheets and do some math around the market. So that was the first beginning of everything. But the point was, the fact that if you've had a bad experience in the market, that can lead you to, okay, I got to figure out how that doesn't happen. Now, in my case, it was partially because I couldn't get out. I don't know what would have happened if I could have freely traded, because they took so much of my capital away, like all of it, okay, that I couldn't come back and try to learn how to trade. So back in those days, everything was hand done. There was one computer out there that you could use. It was a ADP, the same company that does the payrolls now, ADP Comtrend machine. It could do a 5, 15, 30, 60-minute daily and weekly chart. So you could, and it had most of the futures markets on there and those type of things. I don't even know if they'd figured out nearest futures contracts yet in 1981, 1980 when this happened. But the reason why I tell you this is it drove me to want to understand the markets the next level. This little 310 oscillator system worked really good. I ran my entire business from that. So I was running other people's money, doing all kinds of stuff with that, doing seminars and bringing in money, and did a really good job for folks. That system did really good. In 1984, I'm going to swing you to this chart, and this will go really fast now. So in 84, I had started getting into Elliott Wave. One of my customers was a former professor at University of Michigan, and I showed Bill his first charts. I had that ADP machine. He saw that, and then we started looking around. There was something called CompuTrack at the time. Tim Slater started it. I haven't talked to Tim for about 10 years, but he's still around. But what we did was we started doing what everybody did. And I'm just going to bring you into the world of moving averages. I talk about moving averages all the time. Well, Bill and I looked at a lot of the popular moving averages. Of course, the 200 day has been popular forever. That was too long term for us. So we just started to take Elliott Wave, and I developed something between 84 and 86, Bill and I did together, called WaveTech. And WaveTech was really the use of moving averages to confirm wave counts, correction waves, impulse waves, all that, which is going to be another presentation that I'm planning on doing. But today we're going to stick just to indicators. But I want you to understand the backdrop, and all of us go through these type of things where I think you got to get your head handed to you, so to speak, to really pay attention and find out if you want to do something. And once you've done that, which happened to me, I was just immersed into this stuff. I could go on for hours telling you all the things I did, but I'm just trying to get it down so we can move into the indicators. But I wanted you to have the history of what I went through and what I was trying to overcome. What I was trying to overcome is getting rid of any kind of emotions and all of those type of things and get into a methodical way of trading. And we ended up doing amazing. We wrote the very first WaveTech rules. I lived in San Francisco Bay Area at the time, and there was this football team called the 49ers, and Joe Montana, Walsh was the coach, and he had a playbook, and the Cowboys had a playbook too. So Bill goes, we got to have a playbook. So that was when we decided we need to build rules. What we do when this happens, we do this, and when that happens, we do that. We get out, whatever it is. So we started to build the rules, and we wanted to use moving averages. They seem to be really good. But how many of you, I have to ask a question, how many of you have actually used a moving average and you see it one time it holds and it bounces off of it and the trend continues? Next time it doesn't. It why did it go through? So we had the same question. So the problem we were trying to solve is, when was a moving average going to be a valid trend line, and when was it going to be broken? What was going on there? So this is where the PPMs, so I'm going to lead you into the PPMs and the whole suite that I was talking about. And I'm going to show you something here in a minute as we go through. But I'm in probably 1986, and I'm going to jump to 92, and then we're going to be looking at indicators and going through next level stuff here in just a minute. But the bottom line is, what happened was we started to study. So I don't remember. I think Bill came up with the idea. He goes, we need to understand the internals, math that's going on inside of the moving average. So you watch the moving average, it's climbing, and all of a sudden it rolls over, then it goes down. Well, we started to figure out that, and I'm going to talk to you about a really key concept that we came up with, which was angle of attack, AOA, and it's an aviation concept, right? Just the wing lift. And I'm going to show you a couple of things, but markets act very similar. You see markets climbing nice, steady trends. They go forever. When they get too steep, they come back in, right? So it's almost like they stall, and then you come back in, and you have to have energy, which is momentum, a whole lot of stuff. So we just started really digging through the internals of the moving averages, and we thought, well, okay, we kind of know what the indicators are doing and what kind of percent change is happening, and we started to apply probabilities. I'm going to show you a probability map here in a minute, a couple other things, and I think it's all going to come together for you because it's the core of everything that I've done. So, and I'm hoping that out of getting these indicators to a lot of folks, and we've already seen this in the live room and people that had this, we've just been offering them for a little bit over a month, and we've already had a lot of really good feedback. But I'm hoping that this story will help you to motivate and to try to overcome some of the issues that you have in your trading, and some of my story will help you to get to that next level. So I'm going to show you something here real quick. I just have to find it. I've got all kinds of tabs on the page here. So as soon as I find this thing, I will bring it up for you. So I'm going to show you something here, and I'm going to go full screen. So I'm going to take you up to the top of this page quickly. And this is Market Mind and user's manual. And you're going to see a date here, which is Alamo, California, which is in the Bay Area, 1993, Intelligent Market Analytics. That was my company I founded with another guy. And we built the first trading models. In fact, the core trading models that are in, I have used these since, actually the original models were developed in 86, and then we finally got them into the next level of evolution into software around 1991, 92. And then let me just take you down to this. I had it all set up. Maybe I should have started. Okay, here we go. Let me get to the top of this. So everything that I'm about to show you, the entire suite of indicators is right here. The Market Mind Professional Toolkit. And the reason why I'm showing you this is what I've been doing. That's 30 years ago, okay? These indicators were what we developed in 1984. They were used in real trading. I can tell you that when we developed the trading models, we actually took trades that we knew we executed that rule base that we put together perfectly, and then our goal was to emulate in the code those trades as close as we could get them, that they bought and sold on the same day, and we started to emulate that. There's actually 5 models that are around that still exist. We ended up only using 2 of the models when we built our portfolio management software, which was WaveTech and then Portfolio Expert. But this toolkit, you see, first thing here is cycles, and then look at this Fibonacci price objective. I'm going to show you the Fib tool, and I'm going to actually talk to you about this. This is a trade that I talk about a lot, and I'm going to show you a graphic on this, and we're going to set this up as well. I'm just still giving you the history background of what I'm about to show you here. This is a pattern, but it goes on. You got market patterns, which is the pattern finder, which is the core of a lot of stuff that I do. And I'll explain that as we go through these indicators here in a minute. And, so that's some of the toolkits. And of course, the PPMs are part of that. There's a whole sequence here. I just wanted you folks to see that these indicators have been around for a very long time. Just as I said, I'm not making this up. So one of the things that I think is important, and I'm going to tell you, I've met some folks in the community that I've had some in-depth conversations about, and you have to be very careful. I was lucky, actually, back in the day. There was no TradingView, and there wasn't 18 million ideas that were on TradingView and Reddit and all the different social platforms that we have right now. There were no guys like me being able to go out and reach out to thousands of people every day and all that. You couldn't get any information. It was just in a book or two, and even those were sparse. So we're in a much different world, but what I want to tell you is I was lucky because I was isolated by the environment. I had to do my own work. I had to come up with my own stuff. And I know I've always told folks, be careful what you read. You might believe it. And I'm still telling you to really validate the things I'm telling you as well. I've used this for a very long time. I have an incredibly high confidence level in what I do because of the decades that I've done this. And especially when it even comes to our black box stuff, with WaveTech and Portfolio Expert, I don't question those. I know what the rules are. I built the rules. So I know they're executing exactly what I told them to execute. So I have a high level of confidence. One of the hardest things that any of us have to do is to take somebody else's work and believe in it. So this is full transparency here, what I'm doing today. And like I said, my goals are for today is really to give you a lot of backdrop on what I'm doing. This is a seminar. I used to travel around the country. Around 2005 through 10, we were bringing on a lot of investment advisors into WaveTech at the time, and it was called VPM, Virtual Portfolio Manager. It still is. But I was going out there and trying to train them and get them to have a belief system. And I will tell you that it's really important, and this is why I'm going in depth like this today, is for you to be able to follow anything, you have to have a decent belief system. It doesn't matter whether it's a diet or religion or trading. You have to have some backdrop. You have to have some history, some understanding how these concepts happen and what their history themselves is. And that's the beauty of like our software. So if you went to sign up for WaveTech, you can see all the trades that we've done. If a symbol's been around since 1980, you can see every trade on full transparency of every trade and the percent wins and the dollars made or lost, whatever it is. There's 16,000 symbols plus in our system. So with complete transparency. And so what I'm doing now with the indicators is bringing this stuff into a next level for you so that you can get that little better belief system and then start to validate these things by seeing them happen step by step as you get into that. So I believe this is the last screen. So let's go ahead and I'm going to transition now, and we're going to go in and start really going into the deep dive on the indicators. And I'm going to start with the PPMs first. And so I've just put a chart up here. Let me just get a couple of things set up here. Yeah, we won't spend a lot of time. I've got ARC up here. What I want to do is I'm going to actually start from scratch, and we're going to build out the PPMs. I'm going to show you some patterns. So we're starting with the PPMs, okay? And I want to give you a little bit of backdrop, but I'm also going to introduce you to the AOA, angle of attack, and I'm also going to ultimately introduce you to what's being generated here on this chart, which is what I call the 1, 2, 3 ABC trading pattern. And I've told everybody that's been in the live room or around me, if you just learn that technique, that's all you need. In fact, the software and with the indicators here, that's what you're going to be able to play on. That's the only thing you need to know. And it's basically a swing trade. As it turns out, it's a swing trade methodology that's being confirmed by a whole lot of things. And those of you that watch that YouTube channel, you know that I love clustering ideas. I love things that are clustered, right? So what I'm going to do here is I'm going to set up a new layout here, and for some reason, TradingView always starts off with volume on here. I'm going to get that. I'm actually going to let's go to AMD and just randomly pick this stock. What I'm going to do here, and I'm going to show you a couple things to start with, and then we're going to go into the PPMs and we're going to dig into the theory behind them. And then once we get that done, I'm actually going to go through understanding trends and a whole lot of stuff. So I'm in here 40 minutes, so we could be 3 hours, but I'm going to go through all of this as quickly as I can. This is probably going to be one of the biggest sections, maybe not, just getting through the philosophy of the PPMs, because they are exactly what I use to set up all the trades. They are one of the core components in the software, in the trading models, all of that stuff. And I'm going to stick to TradingView. I'm not going to bring up TradeStation because we have built all the trading models. Everything's in TradeStation, but we're going to just focus on the TradingView indicators for today. So what I'm going to do to start with, I'm going to go to my indicators up here, and when you get your indicators, it'll be invite-only scripts, and you'll see them. And I like you folks see it every night. I'm going to stack this all the way. I'm going to put PPM 1, 2, 3, and 4 in that order. And if you put them on that order, here's 1, 2, 3, and then I'm going to also put on the WaveTech 200. Okay. And I'm going to add one more thing here. This is something I wrote. So I always use, and I'll unpack all of this stuff here in just a few minutes. Let me flip this over to a daily graph. So I just randomly picked AMD. There's some nice patterns here. There's some trends. There's a whole lot of stuff that I could spend probably a half hour just on this and the PPMs. But one of the key things that I want to point out, and this will go into a little more detail of what Bill and I were looking at and what we came up with. And so the story has just begun from the understanding the PPMs and the philosophy. So I just want to get them on the screen so you have them there, and then we're going to go to next levels of understanding what they are from the standpoint of how they're identifying trends and all of those things. So first of all, we're going to talk about the indicator themselves, the angle of attack, and the probabilities. Okay, so we're going to stick to the individual moving averages. I put all 4 of them up. So I have a 10, 21, and 40, and they're all simple, and a 200 simple. And I'll be able to bring you into a concept here. If you go up and look at a 200-day moving average, I've never used 200-day till about 2 years, maybe 3 years ago. I started putting them out there. But the 200-day moving average value, if we go, I use all the time a different time series. So I like to use daily, weekly, monthly. So as I change time series, and intraday I might do 1, 5, 15, but you're looking at this time series of looking at short, intermediate, which is the weekly. So short is daily, intermediate is weekly, and secular is monthly. Okay. And I've even shown you on the channel going to the next level and going to quarterly charts when you have a lot of data like we do on TradingView, and being able to go back on the S&P all the way to 1870s, right? So when you have that kind of data, you can really start to do some long-term concepts and ideas and stuff. But all of the techniques that I'm about to show you will work on any length of chart, whether it's a 1-minute chart or if it's a 1-month chart. So it doesn't matter what time series, and you could use 4-hour, anything you want. Okay. So I know a lot of crypto people like to use 4-hour. So that's fine. Don't care. The concepts are consistent based on moving averages, based on their characteristics and things that I'm going to show you. So it's pretty simple. I'm going to go full screen here. And I'm going to draw a couple of things on here first to start. So first of all, I want you to notice here's the 3 averages, 10, 21, and 40. The 10, obviously the shortest length is going to demonstrate the hardest part of the trend. I've always used the 21 period moving average as the primary. That comes into the WaveTech. That's for another presentation. And the 40 is where usually larger corrections are completed against, typically fourth wave. So we're not going to go into that right now, but I want you to see that I'm just going to draw a bunch of lines here, that when the PPMs start to cross their first and second derivatives, they typically happen at different times, and they happen at different times along a slope of the trend that is unfolding. So let me take this off just so you can see what's going on. So this here, each one of these have an angle of attack, and they also have different characteristics, but similar in the numbers. And I talk to you all the time about the angle of attack when it comes to trends, and we're in trend mode and those type of things when you're watching my channel. So let's take a look at the let's take first. Oh boy, okay, I thought I had that all set. Hang on, I will have to find that. Here we go. Wow, nothing's showing up. I had all this stuff set up so that it would be easy to show you. I apologize. Thought all I was going to have to do is click on that. So let me bring that up for you real quick. So bear with me just a second. All right, so this is the first angle of attack. And this is what I want to bring you into the PPMs. You always hear about the trend mode. So this is when things get into trend mode, the angle of attack and the probability of penetration. I'm going to draw this in so that you understand this concept, and we'll go back to the indicators and we'll be going back and forth. So this angle, I'll just draw this in, that we have on this trend, when we get to a PPM value of 0.25, there's only about a 40% probability that the market will penetrate through this indicator. And the higher the angle of attack, if we're at 0.50, 0.80, we actually get into the whole number integers where you start to see 2 and 7, and most of that happens when we're in these long-term charts. But anything over 1.0, there's only a 10% probability. So if we were to draw this up here roughly, this right here would be, what that means is there's 90% probability that if the price of the market were to hit the value of that moving average, that it would hold that particular price range, right? So let's think about what I just said. So if I told you that if the value of the market hits this price and there's a 90% probability that it will not go lower than that, what do? You're going to buy, right? That goes to those of you who've been around and been on the channel for a while know I had a nickname on the trading floor called Dr. Given. That would be a given. You buy that. You don't question why. You just do it. And so as you go up this scale, and I'm going to show you these values here in a minute, and you'll see the characteristics. You'll see this stuff happen. Goes back to me talking to you about building a belief system. If you build a belief system like this, you're going to have something that I think I don't have my favorite cup here. I thought it was on my desk, but there's something you have to be a really high percentage trader, and that is confidence. And how do you get confidence? You have to have that belief system. You have to know that there is a high probability that you're going to be right. And I don't care. Listen, I spent years as an option market maker, and I've traded a lot. And when I see these probabilities there, you're just aggressive. When you've been trading as long as I have, you get super aggressive when you see this stuff, because you know that there's all the cards are stacked in your favor. You have to play those. And that's part of building a belief system. That's part of having the rule set, knowing that when you act on those certain occasions that you're going to have a really high probability of success. And then we won't be getting into trading strategies today, but how to handle a trading value. I would just throw, one of my mentors used to always say, when you set up a trade, you should have an entry point, a risk point, and where you think the market's going. And his theory was, by the time the market, if you're lucky enough to look at a market and say, I think it's going to here, and it goes to there, Frank would always say, you should be selling at different increments on the way up. By the time you get to what the market gets to where you thought it was going to go, you should be out by then. So, I'll just tell you a couple concepts here. As you're going up, you're simply going, as soon as you want to trade, so you can trade in increments. So typically, I always talk about a three-phase trade. First trade, when the market moves your favor, you sell a partial because you want to eliminate risk. And then sometimes you go to a break-even stop, or you go to a stop that equals what profits you just took, so you can't lose on the trade. The second you do that, you now have that confidence going for you. Is when you know you don't get to lose, you can really step into something. So you step in, you take profits. The second phase is along the lines of what some of the targets that you set up. And that is perfect when I show you the fib projection tool to go along that timeline and start to take profits along those projection points. And what's beautiful about that indicator is it's being done for you real time. You don't have to do the math. We have been doing, I just released that indicator in the last 10 days. I think it was last Sunday, actually. So that is a game changer, because we were doing long math in the trading room, showing everybody where the setup is, and then doing this. So once you know you have the probability stacked in your side, that's when you act. And you don't act if they're not, okay? You don't guess. Sometimes you can take some probabilities. You can be a buy the dipper, but there's some setups here that I'm going to talk about today that you hear me say this on the YouTube channel, and it's going to come out more today, is that what we're doing is you need to have structure around your trades. Otherwise, you can't just be buying that one spike bar down. You're better off to let the market stabilize, set up some structure so you can read it and start to get a play off of the markets. I saw one on a 5 and 1 minute chart on Bitcoin. I'll be able to show you that just set up in the last couple hours. It was perfect. Those of you that have been in the live room know exactly what I'm talking about. And you'll see this trade go, yep, that's it. We've traded a bunch of those in the live room. So those are things you want to do. But this angle of attack is important, because that's the element that's going to start to give you some other parts of confidence and understanding. Now, I'm just trying to find something else here, just see if I can. There was another graphic I wanted to show you. I'll see if I can find it very quickly. If I can't, unfortunately, we'll have to. I do have it. Perfect. Okay, so this is tying together the PPM values, and also when you start to see kind of the moving average and the first and second derivatives that I talk about all the time on the when I'm showing you the charts every night and the PPM. So this will tie together. This was what was supposed to come up. I don't know why it didn't, but this is that exact concept. The red bar, green and red bars are when we get into trend mode, and then when we get extreme, it doesn't have to be up here at 1%, but once you start to cross over that first and second derivative, it starts to tell you some things that are really important. And I'm hoping that I'm about an hour in. So I said an hour and a half, not going to be. So we'll probably go for 2, because this is probably the most important thing, especially if you've got the indicators or you're thinking about getting them. You need to understand what I'm telling you right now. And ultimately, the cup I was trying to find, it has DOF pick, and it was discipline, focus, and something else. I wish I had it. It was something that was done back in 1993 when we were used to do these seminars, and I'm just too much in the flow to remember the acronym right now. But you want it, the C stood for confidence. And once you had the discipline and the understanding and all the things that I'm talking about here, now you're a killer trader. You're just going to have confidence to make the trades, and you're going to know how to set the trades up because of some of this stuff. But this angle of attack is a key, not only part of the strategy, but a key element of understanding the probabilities and to build that confidence level. All right, so let's go to the charts itself. Let's start looking at some of these things and start unpacking the exact indicators here. Yeah, just a comment. I just looked at the timeline and somebody said Hold'em, poker, trading have so much in common. I'll come back up for a quick little side story. It's very quick. But I used to live in Incline Village in Lake Tahoe, and my neighbor was a sports gambler, but he had built software for probabilities. And we were talking, we used to walk our dogs on this big street we lived on right by the lake in Lake Tahoe. And anyway, we would stand on the street and talk about this. But when he was talking and I was talking, it was almost, as someone pointed out, the same in gambling strategy. The difference was at the time they didn't have DraftKings. You couldn't lay off bets as easy as you could now. But he was talking, that's what I told him. The primary difference is if you're doing trading, you get to change your bet at any time. Well, you get to do that now with the way that the gambling world works now. But in the old days, this was 1990, 91, I think, when I'm talking right now, and there wasn't the ability to do that. But the similarities, the thought process, everything is very similar to understanding risk. And I should put a book list out, but there is a book by Bernstein called Against the Gods. Read that book. It's about probability, and it's the history of math, really. It's a brilliant book. And he's got a couple other books, but that particular book, Against the Gods, is a definite read. I know it's on audiobooks if you want to listen to it. It's intense. Last time I had to drive from Arizona to Texas, that's what I did when I was zoning out. I listened to that book. I hadn't read it for years, and I listened to the book. It's awesome. But these probabilities and everything that's set up, the markets are about probabilities. There is no certainty. It is about the probabilities, and the higher the probabilities is just what I was talking to you about, the more likely that you're going to be able to be successful. So let's get into the indicators and let's set this up. A couple of things. Now I have all the indicators on this page right now. And what I'm going to show you is a number of things. We're going to start off with these indicators here. And I just want you to see the trends. I'm going to point out the key points where the trends are rolling and how to interpret the indicators. Now there's something else here. There's a concept, and the best way to put this concept out is that there's a reason why there's 3 primary PPMs. And that reason is that I believe there's 3 trends within every trend. So there's you can see it here on the 10-period moving average. That's the strongest part. And then there's the primary, which would be the 21. And then the longer term is where typically, where in this case, it doesn't bottom here exactly at wave 4. I didn't go through the trouble of finding it. I literally just threw AMD up here randomly. But the point is that each one of these moving averages, simple 10, 21, 40, I'm going to now expose to you why we chose that. It was when we were doing wave counts, it was the best to determining the impulse versus corrective waves. So the 10-period moving average, we actually used the 3 for a while because I had that 310 connection I told you about earlier when we started. But we used the 3, and the 3 is pretty good for catching it really steep. But just going to the 10 here, what we're really looking at is that primary strongest part of the trend. And this is a daily. If we go to a weekly, the characteristics change. So we're going to start here on daily. I'm going to talk a little bit about how those characteristics change. But let's just look at the PPMs here, and I'm going to draw some things on the screen just so that you can see exactly where these points are happening. So the first point I'm going to show you here is going to be, we're coming out of this flat change here, right where the moving averages all start to turn up. There's an inflection point that happens. First thing that happens, PPM 1 turns up roughly at this bar right here. And I'll clean this up here in a minute. And then we start to get the acceleration. If we look at the values, this line right here is 0.97. So very early on, we were already in 0.25 right off the breakout. And then we stayed, this cyan line is the first derivative, the green line is the second derivative, and they should have all been coded like this. They're not. I had this on earlier. But anyway, so what we're looking at here is we got that strong trend, but here's what I want to show you. Right here at this point is where the PPM1 rolled over, went through its top line, which is a first derivative, and started to decline. The markets did what? They went right to the moving average. So if we looked at this value right here, it's frozen, so I'll go to it in a minute. That was greater than 0.25. So the probabilities were at least 40%, or let's say 60%, that it wouldn't close below that line. And then we saw the resumption of the uptrend here until we got to the second crossover started to happen over here. And if you notice, we had a downward reversal. We started to get bar patterns, other things confirming that something was starting to roll over. Okay, so let me clear this out just so I can go to the key points. So the key point was the breakout here. The next one was the breakdown that happened right here roughly, which is where that little mini reversal, but the PPM was greater than 0.25. I'll confirm that here in a minute. And then we got this acceleration back up. Look what was happening here on the primary. So even though the market wasn't trading near this 21, let me clean it. Even though this 21 period moving average was, market never came close to it, the characteristics of the PPM2 were just accelerating all the way through right into this level here, where we finally saw it start to break down below its first and ultimately second derivative. And what was happening during that time when that started to happen, the market started to get noisy, very choppy. So it was starting to tell us that the trend was stalling. It was telling us that the likelihood that there was a shift in the markets were going to happen, that all that stuff started to happen at that time. So we're going to go to PPM3 here. And so this continued right over here when I can draw a straight line right in here where we started to get these downward reversals. And this is something I talk about in the trading room. Look, these reversals where you made a new high and closed lower, new high, closed lower, those type of patterns, those are important to pay attention to, because what's happening when you have these type of characteristics, now you're starting to look at feedbacks. Maybe you like to use candles. I'm not a candle fan. I just want to see those reversals. In this case, most of these actually gapped higher, opened higher, closed lower. This is a daily chart. So we start to see these type of patterns. And when I show you the intraday stuff, and I'm going to introduce you to what's called the WaveTech webs when we get to day trading. I don't know if we're going to be able to get there today. Okay, I may have to do, this may be a multiple series here. This may end up being Masterclass Part 1, is that when we start to see these reversals come in, they're telling you something, that the markets are getting rejected. And now you look at PPMs, and this is stuff I talk about on daily commentary, and you learn to read these things. It's, you know, reading the tea leaves, right? But now, negative PPMs, reverses coming on the chart, the moving averages are rolling over. If you can picture that angle of attack is changing, the probabilities are now stacking up that the market's going to trade below those values. Those are the things when you're using this type of indicator in conjunction with these moving averages. Now, these are tied, hard-coded to these moving averages. I thought about giving the ability, and I may still put like a PPM vary or something where you can put your own moving averages if you have some other moving averages. I'm thinking about it. It might be something kind of cool to do where there's some values here. I'll show you that. But for right now, I just want you to understand these concepts, because now I'm going to go through one more cycle on this, and we're going to talk about a negative cycle for a down cycle. So those of you doing options, maybe doing straddles, puts, whatever, just buying puts, buying calls, whatever you're doing, this would be the point where you start to consider those strategies. And I'm just going to make a comment about option trading. Options, just because they have an expiration, doesn't mean time doesn't affect you, okay? So be careful. Timing is more necessary on options than it is on outright taking positions here on something that you could put a position on and not, you know, if you were to short the stock, for instance, you wouldn't have time decay and you wouldn't have a lot of dynamics changing within that option chain that you might be looking at. There's a lot of dynamics in the Greeks and all that stuff. So maybe we'll get into trading options someday, but this is really just understanding that we saw a really nice trend unfold as the market was going up toward these highs. We saw all the deterioration in the PPMs, and then we can see it in the moving averages. We can see it how the market trades around the moving averages. Because once we got to, let me go back to this breakout. Yeah, right there, very early stage of that breakout, 0.34 was the value of that PPM. So very quickly in that, it was literally one click and it was on the bar where I'm at right now. So it was actually the day closed lower that day. If I were to zoom in on it, the day actually closed lower, but the PPM jumped to 0.34, and that was the beginning of this big trend that we just were looking at. And then we got PPM2 just a couple of days later. I'm just moving the cursor over. 3 days into that breakout point, now we're getting confirmation on PPM3. I'm not even bringing in the WaveTech 200 at the moment, but even the WaveTech 200 started to move higher as well. Okay, so what does that mean? That means we had a full on, literally on October 21st, on this trend. Let's just say it ended up here on this reversal, which was March 22nd, and this is going back to going March 22nd this year. So roughly the better part of 6 months. This was a 6-month trend that was starting to unfold, and all the characteristics were very predictable. And even if we did a replay on this chart, sometimes I'll go and set up a replay. You can replay and see it unfold in real time and do the analysis. Even though you kind of know the outcome, you can see all this stuff unfold. I'm not going to run that today, but these are things that when you understand this trend, you're going to be able to follow this trend all along. If I were probably to bring up WaveTech, it probably bought somewhere right in that area where I'm talking and sold up here when the market started to roll over somewhere with, well, all the PPMs turning negative and there were events happening. So it was able to capture, 4.5, 5.5 month long trend, and where prices, went from 110 to 150, so 35+% gain on the stock just by using these techniques. But during the time, and this is something I want to make sure you understand, is during this time, you have understanding of the angle of attack, the probabilities, what's likely to happen. You build this confidence. You're not worried about what the stock is doing anymore because you understand what it's doing. It's the difference between, and I'll just mention, I don't like indicators like RSI and anything that's a 0 to 100 meter. I don't like them. Stochastics, I just never like those indicators. I'm sure they're useful to some of you, but they're not for me. All I want to do is understand what's going on internally with the trend. I'm going to watch for different types of elements. Once we start to see the trend start to stall and the PPMs, like PPM 1 started to stall up here, and we start looking for reversals. To me, those are messages from the markets about how prices are starting to get rejected off highs. That's what a reversal is. It's the inverse. If we were looking at a bottoming pattern, you'd have reversals up. So buy the dippers, they're buying the dips and reversing the charts. And we see that all the time on intraday, especially we use a 1 and 5 minute chart to day trade off of. And once you understand these basic concepts, I know I'm spending a fair amount of time here, but this is an important concept, and you can run this whole gamut and you can trade anything and you can trade it with confidence. And one of the things, there's probably multiple things that I would have to do. And like I said, an hour and 15 minutes in, I spent the most time here because this is the crux of things. I'm going to run through some of the other indicators here. I said I'd go through all 9, so I'll get through them. But this is the concept of the PPM. So I want to do one thing before we leave here. I want to go through a negative cycle here that's set up on this stock. And then we'll move on and we'll hit the other indicators, and we'll go down the stream here as far as the things that I want to cover today. But this probably ends up being the primary core of this presentation today, understanding trends. I'm going to make a couple more comments before we move on. I said there's 3 trends, and the reason why there's 3 PPMs is they evolve. So the first section, PPM 1, is identifying that surge. And one of the things I compare market momentum to like a half pipe, right? So you have the half pipe and you put a ball up here and it rolls almost up to, if you set it over here and let it go, it rolls all the way through, comes up to the top, and then each time it's losing momentum and ultimately it settles down on the bottom. So what happens is every time the market surges, it's putting the ball back up and that momentum's bleeding off. That's what you see. So at some stage, once the momentum starts to bleed off up at the highs, it never comes back anymore. There's no reset of the momentum. And once that starts to happen and you start to look at the next level, so to me, this is the same as looking at a different time series of inside of a trend. Is the shortest trend is going to be identified by PPM1. PPM2 is the primary or intermediate, and the PPM3 is the primary longer term. And you can see over here, when we got to the 40 period moving average, it has started to get noisy here, but that the market tended to flow all the way through. Let me draw this. Let me go full screen and draw it for you. And then we'll set up the negative trend. So what I'm talking about here is, this is right here where, if you notice, the 40 period moving average continued to climb, and this is tied to this this value here. Let me clear this out so I can get that exact. Somewhere over about here is when we started to get through, but we were getting messages from the market over here when the market first broke and it went to the 40 period moving average. It was starting to break down, but the percentages were still bullish from the standpoint that they're still positive. And that is why the angle of attack here on the 40 kept it going. If you notice, the market kind of chopped through that period, and finally when it failed we got this little 1, 2, 3 here. When this failed to make a new high, everything was negative at that point in time, and this is where we started this downtrend. So I want to start, the metrics are slightly different, but the characteristics are the same when we're looking at that. Okay, so let's just take a look at this decline here. Here was the first time that we penetrated the first derivative on PPM1. If you look here, everything was flowing over, telling us that there was an issue here. I actually want to consider putting up the pattern finder up here next, because that's where I'm going to go next. But let's just finish this out. So same exact pattern came on. The other day in the live room, I probably should have done NVIDIA, because it was a really good setup. And in fact, we actually looked at ARC the other day, and after the run up to 70, it looked like it was just rolling over again. That's back at 60. So the bottom line is that once we started to see all the deterioration here, told us that the downtrend, maybe you don't play the downside, that's okay. So what we want to look at now is waiting for the markets to start to turn. So I'm going to go through this scenario. This will take me probably 5 minutes. So he said. Okay. So I'm going to draw in the pattern first, and I'll erase it. So this is basically these little threes. When you start to see patterns like this, just everything's 1, 2, 3, these type of patterns, it's always a corrective pattern. And look at the PPMs. So just noise, all noise. And one of the key elements here, I'm going to, over on the right-hand side, we could argue pretty easily, actually, that there was a 1, 2, we're going to call it 3, A, B, C, and maybe a 4 here. There's a couple other alternative counts, but we had 5 waves up. This was never going to get a 5-wave pattern. It looked like things were starting to turn bullish. I'm going to clear this out so I can show you. So we got the crossover, similar like we did before, but what happened was we traded in the PPM 2 and 3 are still negative. And so here's 2. At that same point in time, it was trying to cross up. The fact that it was crossing up is different here Let me just bring all this up. We got up to here, but we never got to trend values, the best I can tell here. But these patterns was really just part of, I'm doing a wider pattern here like this, okay? So I'm drawing this in. Now I'm going to show you how you don't even need to draw this. So that's the basic pattern there. So I'm going to make it really simple. And this was one of the very first things I showed you in the Market Mind manual, that this was one of the first thing that I had to do. And this is it. The pattern finder. Look what this thing just did for us. It just drew all these patterns in. And this is not like the zigzag. There's actually a reasonably sophisticated algorithm that's looking for this. But this is the beauty. And we can actually do a couple things. This is some of the settings on here are important. Let me just do one thing here. Let me go to settings on the PPM. You can change the colors and all of that, but I'm going to show you a couple things here on the pattern finder. So we're going on and we're going to go next to the pattern finder. So I'm just going to go over here. So we're going to go right here to WaveTech pattern finder, and I'm going to set this up just real quick for a second. Is the pattern finder is embedded in a whole lot of stuff that I've done, because understanding those patterns, whether they're corrective or impulse type patterns, are going to tell you everything. At this point, I'll bring in, like I said, I'll probably be able to get done in 40 minutes, at least get to a stopping point where we covered everything. But the bottom line is that these patterns are everything. So the pattern finder became really important to me from the standpoint of what had to be identified. And one of the things we can do is we can put the pattern finder on this may not be the best chart to do this with. So let's switch here and go to, let's just go to the E-minis, and we'll go. So a couple things we can do. This pattern finder right now, I'll show you the settings. It's set on a strength of 2. We can change this from anywhere from 1 to 2. I'm sorry, 1 to 10. But here's 1. So I'm going to show you 1, and it's going to mark every wiggle on this chart. Okay. So what I'm going to do is I'm going to come up here and I'm going to add it on again. And this time, on the second time I add it, I'm going to change the value to 6. And I'm going to make it, maybe I'll make it a little clunkier, or make it a little fatter. Okay, yeah, so that will happen there. So I am also going to drop all of the indicators so we can just take a look at this thing, and I'll go full screen. Okay, so all we want to do now is look at the patterns, and you're going to see there's two patterns here. There's one where, and I'll draw these in so you make sure everybody's looking at the same thing. So we've got the one set on 2, which is doing all this. It's mapping out every one of the patterns. The one set on 6 is mapping the larger pattern. So when I'm talking about the reason why this indicator becomes so important, you can start to see whether there's any 5-wave sequences, where the overlaps happen. All of those kind of things are possible. And for me to understand and to have this stuff available so I can see all the patterns and not have, I see these things in my mind anyway. When I'm looking at a chart, I see this, but I built this indicator just so it would make it super easy to never miss a thing. So I'm going to set this up a couple ways here. And I'm going to set it up that I want to kind of unpack this indicator a little bit. So bear with me on the shuffling of paper noise that you might pick up. So this is going to map out really good. I'm going to show you something else here on these indicators, which is super cool. I can go in here and I can show the pivots. And let's see here. See if I can. I think since I have them both up here, let me get rid of this. Yeah, they're kind of tiny on this chart, but you can see all the marked points. So depending on what value you put on the indicator, this goes with the pattern finder, the cycle finder, and I'm going to show you in a minute the Fibonacci projection tool. So to be able to project any type of pattern, you got to know where the high lows are, okay? So we can take this thing right here, and I'm actually going to just do a combination of a whole bunch of stuff here. I'm going to start to bring in since we went so in depth on the PPMs, hopefully that was really helpful for you. There's tons of stuff, and we could spend days on PPMs alone and understanding trends and going through stuff. You know, one of the things that I did present to folks, and maybe you can let me know in the comments, is, you know, I've been thinking about putting a school together where maybe it's a 3-day immersive class where it's physical on location. So we've been kicking around doing. I've been wanting to do that for a long time, and just have the opportunity to go through this stuff at a level as if you know, one of my mentors, his nickname was Professor, and it's a couple people have called me Professor here. So I would like to go to that level where it's really a course, and this is kind of a beginning of just, I'm anxious to go back and go through this just to see the types of concepts that I got into. But literally, we could spend an entire, there could be probably a 3-week course on PPMs and different, so much in depth that you can go. But I think I gave you some really good ideas how to look at these things and how to start to tie them together with the moving averages. So now the next level is cycles, and cycles I don't use. They're not huge for me, but they cause me to focus on events in the markets happening around what is perceived a cycle event. Now I'll tell you what it's all about here in a minute. But I'm going to add another indicator up here this time, and I'm going to add the Fibonacci projection tool. And we're going to look at a couple things here, and it frustrates me because I thought I changed the values so they're tiny dots. Let me go full screen. So you're gonna have to bear with me so that I can change the values. So much for changing defaults, but when I go to style, I just had everything set so that it was at least a bigger value. So anyway, it's not doing it. So bear with me while I set this up. So I'm just changing the colors here. And this is the low target, and I'm changing the size of the target as well. So just take one more minute here. Yeah, I set all these colors and everything. Said save defaults. No go. Okay. Well, didn't do much. Okay, so a couple things here. One of the things that we want to look at is how these patterns are setting up. So let's go back. Let's go back to AMD since we spent some time on that. Oh, this is awesome. Okay. A couple things that I have. I want to take the pattern finder. Actually, I'm going to go back to I want to go back here to inputs, and I want to take the pivots off here. But what I want to show you, and this is going to be so powerful what I'm about to show you. It's unbelievable in my opinion. I was really anxious to show you this. So I'm doing the fib ratios, and I'm going to show the pivots. And so this is set on a bar look back of 4, okay? And what I'm going to do is I'm going to take, just turn the pattern finder off so you can hit the little eyeball. You don't have to delete it. You can turn it off. But this is what I want to show you here is the arrows where the pivots are coming from. So, and there's 3 different things that happen on the indicator itself. And there's a couple elements here that I want to show you. And I'll just zoom out a little bit. So the pattern finder is embedded in this indicator. The pivots are where potential patterns are likely to emerge. And when they stop calculating means there's been a violation of the pattern, so it stopped calculating. But I've noticed something. I'm going to try to do my best to unpack this quickly, and we'll get through there. So maybe we'll get this next section will be, we're combining the pattern finder that's embedded in here. So you know how to turn that on so you can see the patterns. Now we're using the pattern finder with the Fibonacci projection tool. And I haven't added the cycles in yet, but these pivots are really important to understand, because when you get these setups, you're going to be able to use the pivot area as a stop point on a trade. So let's just look at a couple things while I draw in what's happened here. And just so you can get an idea where this is coming from. So I'm going to draw in this pattern here. Here's the pivot. This is the projection that came out of this. And I'm going to show you this pattern, then I'm going to bring something up on screen here just so you can see it. I think I have it up there. If not, I'll find it. So this is something we talk about in the trading room all the time. This, I told you earlier when we first started that if you want to, all you need to know is a 1, 2, 3. Well, that's what this indicator is doing. It's looking at all the little 1, 2, 3s and projecting prices, and it'll do it. This happens to be on a daily. It'll do it on, I'm going to show you in a second here. I'm going to go over to Bitcoin. You're going to see it work real time on Bitcoin, okay? And you'll see exactly how the projections are coming out and how they're useful. But all of these projection points, red, this is a bottom point, the reds are the top. So there was actually a projection point right here that generated this, and this never happened. A lot of times you get these projections are just drawn around. The fact that they are projecting doesn't mean they're going to actually happen, okay? It just lets you know that the patterns are out there And I don't have the PPMs up here. Sorry. I don't have the PPMs up here at the moment, but we could determine the probabilities of something like this happening if we bring the PPMs. I'll bring them in a minute when we do the Bitcoin, okay? But these are all the points that are being generated here from that standpoint. And you can see, like right now, this is AMD, this is daily. We actually have valid downward projections right now. These values are over in the far hand of the screen. I suspect it's going to be difficult for you to read them. But low target 101, hang on. Yeah, 101, that's right, we're trading. Target 2, 91, 77, 85, 98. So that's the current values on the upside. And I'll show you where you can see where these are being calculated on the upside. So this is these patterns are going to be really easy. Let's go to a weekly pattern. Here we go. This will be a good pattern to show you. So we're going to add in. I'm adding in the PPMs back in. Okay, so we can tie that together. PPM 1, 2, and 3. So let me just format this a little bit so we can get a better scaling on the upper chart. So this is the three things I was telling you about that happen with this indicator that you have to watch for. The obvious is a downward projection, like here, upside projections, but then you'll see these little extended dots here. Here's another one. And those are, you hear me talk about this on the channel as well, is that there's a pivot point in the pattern. And these are the pivot points. So the penetration of that value, I'll bring it up in a minute. When I use this drawing tool, it freezes the screen. I can't get the values. Was that market would typically start to I guess, move much lower. And so inside of this pattern, this is what I'm seeing now, is this is probably, there's no downward projections, but we're probably heading maybe towards a 200-week moving average. I know that might be a little extreme. That's down at 80. Supposedly there's a chip shortage. You wouldn't know it looking at this. But here's what's happening. So are we going to get this big leg down that I'm talking about? And maybe not, because look at PPM 1 is starting to turn up, but PPM 2 and 3, and we looked at some other chip stocks the other day, and all of these things on the longer term, so the angle of attack is accelerate. What's happening here is that the 21 is accelerating. This is PPM 2 down here in the middle, and then we've got the PPM 1 is up, but most likely all of these averages turn down and probably heading for something over here. And I'm going to draw in this pattern again. There's probably some kind of, there may be ABC, ABC. We fail to make a new high. This would set up a negative pattern to do a swing trade on the downside here. We don't have any Fibonacci patterns in here right now, but we have big acceleration. This is weekly, so we've got big intermediate trends pointing to the downside. There's a lot of downward pressure on them. But we can see all of this stuff right about, I'm going to clean this up, right about in here where this first bar didn't quite draw it in very good, but look at the penetration of the PPMs that started to happen right around that same point, especially 1 and 2. I'll just draw this straight up here, right into this point here where we got a reversal pattern. Right here's a reversal down. There's another reversal. We started to get that, and we have this pivot number. I'm going to clear this out so I can see what this pivot price is. 127 was the pivot, and it's currently 101. So that's 25% move to the, not quite, but close to it on the downside. And so now we're looking at more negativity, prices going down, all that kind of stuff. But we also, in the previous cycle right here, when everything turned up, we actually had price objectives at 91. Let me get the right numbers. 140, 149, 168, 180. And we actually went on this day high right here, it was 164.86. So we came within $4 of that middle target right there. So let's go ahead and convert over, and let's go to Bitcoin. This is not the chart I wanted. Bear with me 1 second. Had all this stuff magically set up that seems to have disappeared. Yeah, so I just let's do a couple questions here. I probably should, since we're at this level, I'd like to finish in maybe in 15, 20 minutes here. I really want to bring this one chart up, and let me see if it slid over to my other monitor. 1 second here. It did. Okay, good. Let me bring that over so you can see it. Okay. This is a typical, this is a setup that we use to trade the E-minis intraday. And this is Bitcoin. On the left-hand side of the screen is the 5-minute. And I've got the PPMs 1, 2, and 3 on both of them. And I just want you to look. This is on the 5-minute on the left. This is one of these patterns. It's called a diamond bottom here. And I'm introducing you to the webs right now. Boy, there's so much, folks. I guess this is 4 hours to get through all this. I really thought I'd be able to get through a lot of this stuff, but there's a lot of detail. But these webs, I'll explain those in a minute. But the webs, we got a bottoming pattern here. PPM started to turn up as they broke up. This is a 5-minute chart, and we traded right into another pattern that we look for all the time on this rollover. But we use a combination of the short-term charts and the longer, short-term meaning 1 minute and a 5-minute to look at intraday. You can see right now we've actually got a reversal on the 1 minute. This is Bitcoin live, real time. We've got 2 reversals, and we're seeing the PPMs still not quite in trend mode. They're at 0 right now, so they're flat, but it won't take much to turn this up. And we have a pivot point right here at the 42,517. We're trading 42,518. So we're right at this pivot point. So if we can get closes over there, then that tells us we'll probably get a swing up. And you go next, you could even put in here and put Fibonacci, retracement values from high low. There's a lot of stuff you can do if you're day trading. But this is a really short-term view of the world. So we got the PPMs on a 1 minute, PPMs over here on a 5-minute basis, and then we have the webs as well. And I think the webs are going to have to be it's going to have to be a whole separate presentation. So let's do this. Let's go. Let's go back over here and let's do some questions here right now. That might be best thing to do. So let's see what kind of questions you folks have, and we can wind this down. I can see now to get through everything. Let's see, you got exposure to everything. The only thing I didn't put up there is cycles, and let me just see if I can put cycles up here real quick. Yeah, so let's go ahead. This is a 5-minute cycle finder, and I'll go back full screen here in a second. Typically, the settings on most of these indicators, remember that the cycle finder uses the pattern tool. So if it's set on 4 is the default that it comes up with, that has always been one of the better numbers as far as recognizing trends and all that type of stuff. So 4 is a good number, and it's projecting off that same pattern finder pattern that we have, right? So we could show pivots here, and then you can see by doing that, now you're going to see where these cycles are pivoting, where the pivot's from. And I need to change this button so it's a little bit larger, okay? So bear with me a second here. I'm just going to have to make them fat here. Okay, so you can see the little bit bigger dots up here. This is where the cycles come in. What's interesting is you'll see the cycle hits and then there's a pivot. So the cycles actually, and I've noticed this quite a bit, it's been really accurate on the coming in the day before there's a pivot. And let me explain why this is interesting. Is this pivot point right here set at 4. So the way that this algorithm works is it's looking for a high low, but it's looking 4 bars back. So it didn't recognize that pivot there until it was 4 bars over. But this cycle came in suggesting there was going to be a pivot at that level. I've seen a bunch of these lately. I've been paying attention that we get a cycle right here, and then we get a pivot. And so same thing over here. You can see where my cursor is. There was a double cycle, high and low, and then the next was a pivot and another pivot, and then we get, here's another bar here. So we got a couple cycles, came right at the low, and you'll see these the day the bar hits. So we had two low cycles. Next thing you know, we got a low pivot. So it's kind of interesting. We've got a pivot coming right now that just came in. This is a 5-minute chart, okay? Let's go ahead and let's put it down on a one minute just to see what this looks like. Yeah, the 5 minutes seems to be the best value. I'm sure that's why I had it there. But you can see exactly how this is setting up. So this tool looks like a 1 bar before a pivot, and like I said, it's picking up a lot of these pivots right before before they're actually getting marked. In fact, it's 5 bars ahead of this pivot right here. So it mapped out on this day, and where my cursor is, and then next day was the pivot, but that pivot wasn't marked out until where this green bar is, and that green bar wasn't mapped out for another 4 bars over. But yeah, so it's kind of interesting, especially if you're trading up into a pattern, you've got a cycle coming up. So that's basically what we're looking at. Same thing over here. There was a cycle right here. You see a little pink dot here. I know it might be hard to see on your side of the screen. Let me draw it in. Make sure you're seeing exactly where I'm talking about here. So there's right here and here, there's 2 cycles. It comes in right on this bar here. Next day was the pivot, another cycle, and then even if you're waiting for here's cycle, here's another cycle, and then this one's a few more days before this. So what I'm looking for when I see these cycles is, like in this is pretty flat. This is a 5-minute Bitcoin, so we're not getting really any trending. But the point is that if we start to see those reversal patterns, like when we had, let me clean this up so we can get to another point in the chart. Like I said, it's a pretty short-term chart, but here's a pretty good example here. Here's the pivot. The next bar was the big pivot, and now we got another pivot and a pivot down, and we got right here was a warning for the next pivot. So in theory, the next bar should be a high. You can sell into the push on the high, and then the pivot comes in here, should be a low. And so we're just looking at how these patterns are setting up. And I like when we turn on the pivots here that it's drawing the line from pivot to pivot, so you can kind of see where those things are setting up at. So let me come off. Let me just see what kind of questions you folks have here. We'll do a couple questions. Yeah, you can see that Bitcoin, here's the cycle. What we had on one, where was it at? Here we go. Yeah, the PPMs are very handy in day trading, just trying to figure out directional moves. So it helps you to trade, but a lot of times I use, if you come into the live trading room, you'll see me, I work off the order book. I think it's primarily just because of my background being a floor trader. I still see the order book and the flow in the order book as telling me another story, which I'm not sure how to communicate what's going on there. But these patterns, I'm just going to go back to this. Maybe I can pull this off. Let me go to, I actually just want you folks to see some of this stuff happen real time. And this is literally a 30-second chart. I know it's just going to be noise, but hopefully we can see some. Here's a cycle. This 30-second graph, right? So I just want you to see this stuff calculate real time for a minute. No, do I have a 1020? You know, I do have something that that I use here, and I've got it on there, and it's in my scripts. I've not published it. I can. It's pretty simple to put together. Actually, one of the guys in the live room actually shared it with us, and but it is pretty simple. The one thing you can use, there's a ribbon indicator in TradingView, and you can change the ribbons. I think there's a 4 ribbon, so you can put that on 10, 21, 40, and 200. You can use that, and then theoretically you can save the defaults, but I haven't had good luck saving my defaults from that standpoint. Yeah, we got a bot coming in on us here. Okay. Yeah, it's a 4 ribbon. Paul, thanks, Paul. That's what you can use that, and hopefully I got rid of the bot just now. Yeah. I know, Mohammed, you've asked that before. The color coding in the, what time are we getting to be? Yeah, so let's just do that. Let's get to a normal chart. This is Bitcoin daily with all the averages in there. Let's take and let's just clean this thing up all the way. Let's do the final thing that we'll do is the webs. And that's something I don't talk about in the on the YouTube channel at all. So I just got rid of everything, and I'm going to put the webs on. We'll talk a little bit about the webs. Okay. So this is daily. It doesn't matter. What? Yeah. Hey, Paul, can you put the exact name in the chat? I know it's 4 ribbon. Somebody put a code together in our live room, and that's where I got the code from. It's under technicals. Yeah, let me just see if I can, let's see if we can find it on screen for you guys, right? Let's just do that real quick. So we go to indicators, technicals. Yeah, I don't know what the name of it is. There's a bunch of EMA stuff here. SMA ribbon. 1, 2, 3, 4. Yeah, these are users. They're not part of the system. Yeah, there it is right there. And then you can go in and edit it, theoretically change the values over here, inputs. So you can go 10, 21, 40, and 200. There you go. And then if you want, you can change the colors, the style, all that kind of stuff. So that's the ribbon. There's one under SMA, simple moving average. Yeah, that looks like it. All right, so let's take that off for a second here. So let's talk about these webs, and this is one, for me, one of the best pattern recognition tools. This is daily. Let's this is a 15 minute. Yeah, so Mohammed, the different colors is the shorter term ones are in red. I believe the rest are just in. So the shorter term tend to go up higher or lower in the pattern, so it kind of marks out. You notice it gets red on the bottom and the tops. It's just that and these are not anything proprietary, folks, just so you know, on from this level. This is what these are just for pattern recognition. There's standard linear regression lines. There's 20 of them. They start at number 2, length of 2, all the way to 21. And rather than asking you folks to put this thing on 21 times and change the values, I just built an indicator so it's easy to use. What is unique to it is the interpretation of things. And I call it the WaveTech webs because they look like spider webs. And this formation that we have right now is kind of what I've always called a dragon head. Typical dragon heads, this is what, 15-minute Bitcoin. Typically, the dragon head will, let me draw in what this does, is there's a couple patterns I'll just show you real quick here. And then we'll do a few more questions and call it quits for today. But there's these little V's that come up right here. And like I said, the red lines are the shorter lines, so they move faster in the pattern. That's why you see, I'm just drawing in the reds and purples. They sink to the top or rise to the top or sink to the bottom in the pattern. And so they tend to kind of map it out, but I'm just drawing in this pattern. This is basically what I call the dragon head, and dragon heads usually are an extended wave where we're looking at market extending. This is kind of a mid pattern. Let's see if we can find some stuff here that would reflect that type of pattern. I'm just looking at some sequence that we could look at. Of course, we've been in a downtrend here. 15-minute, let's go to a 5-minute. I saw something earlier. Yeah, so let me pull this over. We'll take a look at it. Here's one of those types of patterns. So drawing this in fairly quickly, there's a couple characteristics of what happens here. And this is the flow or the trend of the market. So these are our linear regression lines. And what happens is this, where I'm drawing in right now, is showing you where the flow is of the markets. When we start to get these crossovers and these webbing, this is where the bottoms form. Also, if you notice, there's reversal patterns to the upside that are popping out in these bars. I'll clean this up. So then once you get to this next move, now you're getting this kind of stair step. Here was one of those kind of dragon heads that I was just drawing. Is like this, and then we get the move up. And so this one was trying to form another dragon, and it tried to move up, failed the actual bar embedded in here did not make a new high from here. And so you got a failure. And now you've got this move down here. And this webbing here I call a veil. So it starts to put regression lines or resistance above the market. So when you see lines like this in the webs, this is the flow of the market. And the tighter they are, the stronger the trend, up or down. So these are spread out and pretty good, but these really tight ones you'll see will last for a while. So let me take this off. Let's find you'll see like the sharpest declines here happen when we're into this mode here. So these folks that have been in the live room are really gravitating to these because they are really showing you the strength. Like this is the strong part of this trend. We get this little hesitation. They usually form this, and then we start to get some flow down. This is kind of messy, but once you broke down, you can see the flow of everything got really tight together, all these linears. And then we get a diamond, just means it looks like a diamond. Let me clean this up. I'll show you. This little diamond, it starts to do this little diamond shape here. The linear regressions start to cross over. You get reversals to the upside where market goes down and closes higher. This is what, a 5-minute bar? And then you get this blast off. So this was a pretty nice move. That's 42.8 up here to 43.960. So it's a pretty substantial move off a 5-minute graph here. So when you're looking at these crossovers, this is typically, if I spread this out, it would look more like this is more of a dragon head. And then we finally get this where we get the diamond formation start to form. This is a diamond top where you start to get these little moves like this. I just draw them in, get these multiple moves, and then we've got this big trend here. And typically when you want to, if you start to see this, let me back out. I got too much going on here. And when you start to see this and you get this rally back in and you're getting this ridge where there's a lot of linear regressions, there's a major resistance here at, I'm trying to read this number, 44,000 even or something here. And then you get the reversal on the chart and then all the flow. And then you see the big waterfall. So all we're looking for here is the crosses, looking for changes. So here's, if you look here, this section that I just put a V over, it's looks like a kind of a diamond. Like if you cut a diamond out, it would look like this. You get this little bubble. We actually spiked through everything. And then we just started this big downtrend here. And the flow kept coming out where it was going. So if we threw the PPMs on here, we'd be able to, especially at all three PPMs, we'd have the feel for negative and positive flow that would confirm exactly what's going on. I just want to, I know Mohammed's had some questions here in the live room as well, so I want to make sure I answer because I've been trying to get to his answer for this. So the colors are, so the colors in here tend to, like I said, gravitate. The purple and reds you'll see are at the highs and the lows, so they're the shorter end of the spectrum. And I think there's one that one of the reds is a longer one. You can go in and look at the actual values on each one of these. If you go into the indicator, I believe they're all illustrated there. And so you can do that. So let's go ahead and let's add the PPMs in here. Add one, 2, and 3. Yeah, sometimes I just like to take these and scale them back just so they're, I just need to see their values, and that'll give me more of this chart to take a look at here. Let's get over to current action here. Okay, so here's a good example, just using webs and the PPMs as somebody has for day trading. So this is a 5-minute chart. You see all the crossovers started to happen just like before. We got the diamond low. This is the pattern. This is the middle pattern here, which was a little dragon. We got into a rope, and then we're starting getting some noise here, but the market is really starting to heat up a little bit just on a 5-minute graph. Let me get off the thin bars. I know a lot of you like the, if I can get this scaled right. So that's how I want them to look. So you can see this nice pattern here. We've got the flow on the webs right now look like they're trying to move up. Looks like we want to retry this high here on the pattern. 42,650. Last trade 42,592. So we could just hang out here for a minute, see what kind of flow we get. We need more acceleration here in the PPMs. So one of the things, and maybe I'll do this when we finish here. On the PPMs, if you set it's to the precision, if you set the default from default to 4, you'll get a better reading. You'll be able to see multiple decimals on the PPMs. On intraday charts, you have to move the decimal over 1. So right now, PPM 1 is 0.16, not 0.16. On dailies, it reads like I always talk, but on the intraday, it has slightly different. So this is, we need to see right now, PPM 1 is at 0.18, not quite at trend level, but it looks to me that they're going to challenge this high, and we could probably, let's put some tools on here. Let's do a trade together. We'll finish right here. Let's go here and let's put the fib projection tool here. And we do have some projections right here, right now. Let me expand this up. And so if we would have had this up a few minutes ago, the projection high target 1, 42,631, 42,687, and 721. Okay, so we actually satisfied the first so far, but if we can get the PPM to get over, it's 0.22, we can get over 0.25 down here in PPM 1, and we can get PPM 3 to break out, then we'll probably trade up into these upper numbers, would be 42,687, 721. So we're trading right at that value right now. And you can also put alerts on these numbers, by the way. It's very, very simple. You can go up here and I know there's a way to add an alert. So I just, for right now, I just put an alert. So if it hits that number, I'll be alerted that it's hit. So one of the things I'm trying to figure out is if there's a way to turn alerts on so it's automatically on. So, but yeah, so it'll be interesting. We'll hang out for a few minutes and watch this. It's 15 after the hour, so we'll go for a few more minutes. Feel free to ask any more questions that you might have as well. Here was one of these pivot numbers down here that I was talking about earlier, 42,381. As soon as we printed through that, that was the breakout point. We're not getting the acceleration yet on the PPM, so maybe this is going to fail here. The last high over here was 42,650. And it's interesting because we've got a slightly higher price objective off of the projection tool at 687,721. That's these numbers up here. So we'll hang around, watch this bar for minutes. So I think you folks are getting an idea. Let me just come back on screen here. So I think I want to wind this down. I hope this was really helpful. I learned something today, that it's hard to get through all 9 in a deep dive. That would take probably 9 hours. Probably at least 1 hour is useful for every indicator. The PPMs are the centerpiece, and I spent a lot of time there, so I think that will be very helpful if you've watched all the way through to this video on the replay. And and I'm going to do more of these. Like I said, this is going to be a series. Probably next time, I think I'll just focus in on maybe trade setups and do a couple things so you can get a feel for what we're doing in the live room, as well as how these indicators can really help you. And I've noticed that even on the crypto, they're really good on the price objective tools. So you could zero out, and let's just put this on like I guess we could go out to maybe a 4-hour chart. Let me reset this chart. Yeah, so just to look here, let me get the thin bars. It's pretty ugly. Yeah, so here's somewhat of an interesting. Right now there is upward objectives 43,364. 43,840, 44,133. That's basically a retest of this previous pattern up here. You can see on the screen. Let's see if we can expand this just a little bit. There you go. So you can see a little bit better there. We're getting crossovers, maybe a diamond bottom here. Sometimes we'll get a rounded bottom. And really all we're looking at is this Fibonacci price objective. Not a big deal. This is a 4-hour graph on Bitcoin. And what we're looking for here is a move really to go back and retest these highs in this consolidation here. It's not even a swing objective on the upside. It's really just kind of a retest of this pattern. And the minimum move is 43,364, which is where the crosshairs is here. Yeah, so I'm glad. Listen, like I said, this was the first time that I've done one of these at this kind of level. So it was kind of fun, but I figured out something. There's going to be a focus in the future. We're not going to get through all 9, but we did get exposure for all 9. So if you're interested and you watch this video, just make sure you go to the link that's on this page right here. And there's another video explaining how to get set up and even get into the live trading room, which you'll get at that level as well. You'll actually get free access to that. And So I think these are. I know they are because I've used the webs for day trading forever, and they're good for any length of chart actually, and identifying problem areas of congestion and all that. Matter of fact, I'll just put the E minis up here real quick and flip it to daily, and you'll see on the. Let me reset this chart. You'll see that the daily is starting to get a pattern that looks like it's rolling over. It's got one of these veil patterns that's on here. And we actually have downward projections for the Fibonacci tool is on here. So the downward projection right now, 43, 41, 42, 31. I talked about this on the channel. Same thing that's on TradeStation, of course, same indicator. So we're looking at the ultimate low, 41.62, basically is a retest of that 41 low. So that's set up on the chart right now. And the PPMs are starting to get fairly negative. On PPM 1 is now at a minus. Let's see what the values are. Minus 0.12, so not quite in trend mode. PPM 2 is still positive. PPM 3 is basically flat. So there's not a lot there. So we're trying to roll over, and this pattern could end up to be a dragon head. Let me go full screen, then I'll come back on and we'll end. So here's that formation. So if we get it up, if the linear start to cross here, then you're probably going to get a move up. Right now we got PPM 1 declining, PPM 2 is stable, PPM 3 is stable. So that's suggesting there's probably some relative support where we're trading. I've been talking about 42.60 on the YouTube channel, but there's support around here. So all we have to do, if you're just using the webs, you'll be able to just take a look and see if we start to get crossovers in the pattern. Right now there's a couple small ones here. If I go back to bar charts for a second, you'll see there's a little bit of webbing here, but not material. And so next couple sessions will tell us all about that. Okay, folks, I'm going to come up and we're going to call it quits. 2 hours, 24 minutes, so almost an hour over. So quite a long time. I really appreciate it. We had quite, I think, a decent crowd for Saturday afternoon. So I really appreciate everybody. Make sure you get signed up. Like I said, the indicators, I'll go to this page. It's a little easier to see. This is the link if you're interested. It's one-time cost. It's not a subscription. You get them, you keep them, and then you get to also come into our live trading room for a month for free. And if you like what we're doing there, you can hang out more, but it's not required. Just trying to really get folks exposed to a lot of this stuff that I did today. A lot of things that we talked about today, we do in the live room and set up actual real trades and do those kind of things. So anyway, hopefully I'll see you folks. And thanks again for participating in this. I think there was some good questions here. And yeah, this will be on the YouTube channel. When I stop broadcasting, it will process and there'll be replays. So you can watch this 2.5 hours as many times as you want. And tell your friends, spread the video, subscribe, the whole routine. So anyway, folks, thanks again. I thought it was really, really good today. I think the in-depth part of what I did on the indicators, especially on the PPMs. That was a deep dive there. So that should give you some really, really great stuff. So get started. Get started. And if you're not already, bought these things, it's not a subscription. It's one time, one and done. You get them, and that's going to be it. So I'm excited about having these for you. We are working on a TradeStation release that's going to be not real long, but longer, because we thought we were ready to launch on the App Store. And a week ago, Friday, they announced that they're closing the App Store. So anyway, thanks again, folks. I hope you really enjoyed this. There's going to be a series of these. Like I said, I learned something today. We're going to have to focus in on probably just doing one indicator at a time. One of the things I do want to do is really trade setups and some other things. And ultimately, we're going to go through, because I think once we do find the bottom in the market, whether we have or not, we'll find that out. But I think you're going to want to be probably utilizing our portfolio management stuff. I'm going to be doing a WaveTech presentation like this and a portfolio expert. So anyway, folks, have a great rest of your weekend. See you tomorrow night on YouTube. See you then. Thank you. Bye now.